Hello, and welcome to Financial Literacy 101, the Spring 2018 presentation. My name is Tamisha Grant. I am a counselor in the Financial Education Center. I am also an AmeriCorps member, and my job this year is to be of service to the Greenville Technical College community and be able to connect them to different resources, and part of that is being able to let you guys know about different tools you can use to be more financial literate. All right, so let's get started. The topics we will present today will be financial literacy and goals, budgeting basics, credit and credit scores, and we will also talk a little bit about the Financial Education Center at the end. So what is financial literacy? Financial literacy is the ability to make informed judgments and to take effective actions regarding the current and future use of money. So this includes your buying choices, your ability to be able to purchase items, as well as deal with any kind of issues that you may have, be that housing or unemployment, medical emergencies, if you have children and they have any medical emergencies, anything that has to deal with money. You will be able to make better and more informed choices. The more you know, the more you'll be able to budget and save effectively. So take a minute and think about your financial literacy goals. This could be anything from making a major purchase, such as a home or buying a car, or being able to complete your education. All of those things have to do with money, and so therefore having financial education and literacy is going to aid you in being able to make the best decisions possible. So let's talk a little bit about budgeting. A budget is a plan for managing your money in a way that best meets your personal needs and wants. So whether that be going on vacation this summer, or being able to make sure that you have enough money in your budget every month to get back and forth to school. All of those things are relevant and important to your financial success. So being able to know how to properly budget is going to help you greatly in being able to achieve your financial goals. So as I said, why is budgeting important? It helps you focus on your educational goals. It helps you develop better financial habits. It relieves emotional stress and assists you in achieving your financial goals. So being able to focus on your education is going to be a lot easier when you are no longer stressed about money, be it emergency needs or just your day-to-day needs. You'll be able to better handle those and be able to focus more on your studies. The more that we are able to impart you guys with information, the better it is for you in terms of your decision making when it comes to money in the long term. So we're going to take a look at a budget. In this budget scenario, Nate is trying to save for a car. In his actual budget, which means the amount of money he is actually spending monthly on his expenses, he is spending no money to actually save. He is not saving any money, and he's spending about $100 on a cell phone, car payment to his brother, public transportation, entertainment, he's spending around $60 to $65. His personal shopping is $175, and his occasional spending is $100, totaling $600. Okay? In his budgeting goals, he wants to spend $100, save $100 monthly. He wants to lower his cell phone bill as well as the car payment amount that he's giving to his brother. He wants to save on public transportation and entertainment, as well as personal shopping and occasional spending. I want you to take a moment and think about what is going well with his budget and what you think he can improve upon. Okay, now that we've taken a moment to think about what he is actually doing well and what he can improve upon, I will tell you that he is making some great strides in terms of lowering his bills that are fixed. Those are going to be a little bit more difficult to manage. However, he does also have some variable expenses, meaning that those are expenses that fluctuate from month to month that he can actually do better on. So he wants to go from $175 to $50 in personal shopping. I would specifically think that that is a lofty goal that may be a little bit difficult for him to maintain. We would want Nate to actually maybe make his budgeting goal a little higher to make it a little bit more attainable. We want to make sure that our budgeting goals are attainable so that we can have overall success. We're trying to create good habits, and to create good habits, we want to make sure that we are being able to achieve the goals that we set. All in all, Nate can and will be able to achieve his goal if he takes some of his variable expenses and just tweaks them just a little bit. So in order for him to be able to achieve his goal of $100, he could save in personal shopping and entertainment as well as occasional spending. However, he does not have to reduce it so low that it's going to be difficult to maintain in the long term. All right, so just some recommended guidelines when we're talking about budgeting. Rent should only be 30% of your net pay. Utilities should be about 10%. Car insurance, 5%. Cell phone, 5%. Occasional spending should be about 10%. Savings should be about 10%. Food should be about 15%. And car loans should be about 10%. Entertainment should only be 5% of your overall budget. Keep in mind that savings is something that normally gets left off of most people's budget. So if you want to make sure that you're able to save, create a budget in which savings is always an automatic part, and therefore you'll be able to save on a more consistent basis. So let's talk a little bit about credit now. Credit is trust given to another person for future payment of a loan, credit card balance, or any kind of large sum of money that you're getting from a lender like a bank or a credit union. Why do we need credit? So I want you to think about the reasons that you think that you've needed credit in the past. If you've never used credit, think a little bit about what you think credit is needed to purchase. So purchasing large items normally is going to need the use of credit. When you are looking for a large ticket item such as a home or a car, you normally do not have the cash up front to pay for those items. So you're going to have to go to a lender in order to borrow that money and pay it back in installments. So in order to get a line of credit, you're going to have what is called good credit. And good credit is going to be reflected on your credit report. And a credit report is a report that contains any information regarding your financial history. It's going to have things such as your identification and employment, your payment history, inquiries, and public record of information. Here's an example of a credit report. So when we're looking at Stephanie, we see on here that they have her employer record, her address, the things that she has in collections, as well as open lines of credit. She also has the number of inquiries and the percentage of use, as well as her credit score. So off looking at her credit report, we can see that Stephanie has some problematic things going on with her credit. She does have things in collections, and she also has revolving credit in which she is either at the max or over the limit of her credit limit. That is going to make her credit score poor, and it is also going to make it very difficult for Stephanie to get other lines of credit. So what is a credit score? A credit score is a number between 350 and 850. 850 is being the absolute best and 350 being the absolute lowest. Most people fall somewhere in the middle. In order to be a candidate for credit, you should be somewhere within the high 600s to the mid 700s in order to be considered a viable candidate for credit. It helps the lender predict how likely an individual is to repay a loan or make credit payments on time. So this is going to be your reflection of how much you spend and how reliable you are as a person that the lender will be able to predict how likely it is that you will repay your loan. What makes up a credit score? So a credit score is made up of 35% of your payment history, 30% is your total debt, your 15% is your credit history length, which is basically how long you've had credit. Inquiries of new credit are going to be 10%, and the types of credit in use will be about 10%. So basically, the types of credit you use is going to be reflective of whether it's revolving and or fixed. A fixed credit is going to be something that has a finite value and can be paid down to zero, such as a car loan, a home loan, or your student loans. Revolving credit is something like your credit card, which is going to have a credit limit that can be charged and recharged again, which makes it not as strong of a credit type as fixed credit. Making sure that you're paying your bills on time and that you keep the current level of debt low is going to create a favorable score for you. Some do's and don'ts of credit. Definitely make your minimum payment. Do contact your creditor if you're having trouble making payments. Do be wary of anyone who claims they can fix your credit report. You can fix your own credit report by contacting your creditors yourself. Don't feel pressure to get a credit card. Don't pay your bills late. Don't spend more than you can afford. And definitely don't ignore the warning signs of credit trouble. Please do not share your credit card number or any of your financial information with other people as to avoid identity theft and fraud. So let's talk a little bit about interest. So if you were to have a credit card balance of $3,000 and the interest rate, which is the cost of borrowing, is 18%, if you make the minimum payment, it will take 18.5 years to pay off, making the total number of interest a whopping $3,923.08. Now, if you take that same $3,000 at a rate of 18% and you pay over the minimum due at $100 a month, it will only take you 3.5 years to pay off, and it will only have an interest of $1,015.49. Basically, the more you pay, the less you pay in interest. Interest accrues over time, and so if less time is passed before the principal balance is paid, the less you will pay interest. This concludes the Financial Literacy 101 course. If you have any questions, we are here to help. We are located in the Financial Education Center, which is on the Barton campus in the TRC Building 102, room 151. Thank you. You guys have a great day.